Some people seem to get richer no matter what happens in the economy. It's almost like they have a secret that keeps working in their favor. After watching this unfold for years, I realized that one of the biggest reasons the wealthy keep building their wealth is compound interest. In this video, I'll explain why the rich get richer, the secret of compound interest, and how this simple concept is behind their ability to grow their fortunes over time. The power of time, how long-term compounding works. Time is one of the most important factors when it comes to compound interest. The longer you leave your investment untouched, the more it grows. This isn't just a small increase, it's an exponential one. Over time, the interest earned is reinvested and starts earning its own interest, creating a snowball effect. For the rich, time is truly on their side. They have the luxury of letting their investments grow for decades, allowing them to reap the full rewards of compound interest. If you start investing early, the wealth you generate from compound interest can be enormous. Take two investors. One starts at 25 and the other starts at 40. The person who begins at 25 has 15 more years for their money to grow, which can result in a massive difference in wealth. That early start gives them a clear advantage, allowing their money to compound for a longer period. The longer you wait, the less time your money has to grow. In other words, the longer your investment is allowed to compound, the more significant the growth will be. So when it comes to building wealth, time is one of the best assets you can have. Snowball effect, how compound interest accelerates wealth. Compound interest creates a snowball effect. This is when the wealth you earn from your investments grows faster and faster over time. It's not just about earning interest on your initial principal anymore, you're also earning interest on the interest. The more you reinvest, the bigger the snowball gets. The rich benefit immensely from this effect. They start with larger sums of money, which means they can reinvest more. This allows their wealth to grow at a faster rate than someone starting with a smaller amount. When you reinvest interest, dividends, or profits, you create a cycle where each new cycle of compounding builds upon the previous one. For instance, if you have a small investment, your gains might be modest at first. However, if you start with a larger sum, your returns grow much more quickly because you have more money to earn interest on. As time passes, this compounding becomes a powerful engine for wealth generation. Large initial capital. The rich have more to compound. Larger initial capital gives the rich a significant advantage when it comes to compound interest. If you have more money to start with, you can earn more interest. This allows for a much faster accumulation of wealth. The rich know this, and they tend to start with substantial investments, which means the compounding effect starts at a higher base. Let's consider two investors. One begins with a modest sum of $5,000, while the other starts with $50,000. After the same period of time, the second investor will have a far greater return simply because their principal was larger. With a larger initial sum, the compounding process is magnified. This isn't just about making money once. The rich continuously build upon their wealth. They add to their initial capital, constantly growing it, which in turn increases the power of compounding. The bigger the base you start with, the larger your compounding growth over time. Reinvestment, the key to rapid wealth growth. Reinvestment is the secret to rapidly increasing wealth through compound interest. When you reinvest your earnings, whether it's dividends, interest, or profits, you're allowing compound interest to work even harder for you. It's a continuous cycle. Reinvest today, and you earn more tomorrow. The wealthy understand this principle well. They don't just cash out their profits. Instead, they put them back to work, growing their investments even faster. Reinvestment takes the power of compound interest to the next level. It builds on itself, creating a cycle of growth that becomes self-perpetuating. To illustrate this, consider someone who invests $1,000 and earns $100 in interest over a year. If they reinvest that $100 instead of spending it, they can earn interest on it the next year. After several cycles, the difference between someone who reinvests and someone who doesn't becomes substantial. Compound interest in diverse asset classes. Compound interest doesn't just apply to one type of investment. It's a tool that works across various asset classes. Stocks, bonds, real estate, and other investments can all benefit from the magic of compounding. The rich know this and use a diverse range of assets to accelerate their wealth growth. Stocks, for example, allow for dividends to be reinvested, which means the compounding effect grows stronger with each cycle. Real estate offers opportunities for appreciation and rental income, both of which benefit from compounding over time. Bonds, too, offer interest that compounds if reinvested, allowing wealth to grow without the need for a larger initial capital. The key difference between traditional savings accounts and these wealth-building assets is that the latter offer higher returns that are more suited to compounding over the long term. The rich use these high-return vehicles to grow their wealth faster. By strategically diversifying their investments, they enhance the effects of compound interest, making it work harder for them. Compounding wealth inequality. The rich get richer. Compound interest plays a big role in widening wealth inequality. The rich have the capital to invest, and the more they have, the more their wealth grows. It's a cycle that builds on itself. Those with more money to start with have the ability to invest in higher yield opportunities, which gives them a bigger advantage when it comes to compounding. Consider two individuals, one with a modest sum of $10,000 and the other with $500,000. Over time, the wealthier individual can access investments with high returns and reinvest more of their profits. The gap in wealth between them will continue to grow because the wealthy person's compounding effect is much stronger due to their larger base. This process isn't just about initial capital. It's about access to opportunities and the ability to reinvest. As the rich continue to compound their wealth, the inequality between them and the rest of the population increases. The role of financial opportunities and access. The rich have access to financial opportunities that allow them to exploit compound interest in ways most people cannot. They invest in high-return vehicles like private equity, hedge funds, or high-yield bonds, which offer compounding at a much higher rate than traditional investments. These exclusive investment opportunities aren't typically available to the general public. The wealthy use their financial networks, advisors, and insider knowledge to access these high-return assets. By doing so, they significantly enhance the effects of compound interest, making their wealth grow even faster. For example, a high-net-worth individual may invest in a private equity firm that offers returns far greater than those of a typical stock portfolio. These opportunities allow them to maximize their compounding potential and outpace traditional investors who are restricted to lower-yield investments. The rich don't have a magic formula. They've simply figured out how to use compound interest to their advantage. Now that you know how it works, how are you planning to use it to grow your own wealth? Drop your thoughts in the comments, hit that like button, and don't forget to subscribe for more tips. And if you want me to cover another topic, let me know what you're curious about.